Lisa Moladina. I'm a Smart Solutions exec here at Western. And it's my pleasure today to welcome you to the Microfinance Plenary session. I'll just introduce our speaker, Jannalee Anderson. Jannalee is a graduate of both the HBA and the MBA program at the Richard Ivey School of Business, afterwards which she became both an instructor and an international recruiter. As an assistant professor of business at Tinsdale University College, Jannalee developed a micro-enterprise development course and field research trip to Central America and co-founded the International Development Degree Program. As a result of her growing passion and involvement with microfinance, Jannalee accepted a position in corporate philanthropy at Opportunity International Canada. Currently, as a National Director for Philanthropy, Jannalee seeks to build partnerships with Canadian businesses and foundations that want to expand entrepreneurship opportunities for people living in poverty. She has visited more than 20 countries in the developing world and has witnessed the need for transformational microfinance firsthand. So without further ado, please join me in welcoming Jannalee.
Good morning. It is exciting to be here, and I hope you enjoyed listening to Jeffrey Sachs as much as I did. We probably all have his book, and it's probably read to a greater or lesser degree, depending on how busy you are. But it's obviously a real honor for all of us to be able to hear him Skyping in from Hong Kong. So that's quite a challenge. Good job to you guys in the front here that helped with Skyping him in.
Nice.
So thanks for coming to this session this morning. The interesting thing is I actually found out kind of what I was supposed to speak about when I went and looked online. And the one thing is, it talks about microcredit. And I always just want to say right away, you know what, folks, we're going to talk about microfinance. Microcredit, when we look at where really have we gone historically and where are we going forward, microcredit is past, microfinance is forward. So that's what we're going to take a look at today. This is a slide from one of our partner organizations in Australia, and I love it because it just gives us a little bit of context. So basically, a parking meter in Australia makes more money in an hour than basically half the world, or just under half the world, in a day. And I would say, you know, those of you from London or Toronto, Hamilton, Waterloo, we would probably say, depending, especially for Toronto, you could probably say a parking meter in Toronto makes more money in 15 minutes than half the world makes in a day. So it gives us a little bit of context. I'm not going to go into all of the statistics as far as poverty. We've heard a lot from Jeffrey Sachs. You guys are here because you know about poverty and you want to make a change. But the thing is, we do need to realize there is a problem, so therefore we need a solution. And so that's what we're going to look at today. So I call microfinance the business of hope. How many, just out of curiosity, how many here today are business students? Just out of curiosity. Okay, good. How many of you have heard about microfinance before? Okay, good. Good. Because what we've got a lot to cover today, so there are some pieces that I'm just going to skim through so that we can spend a little bit more time on the innovation side of it. So it's good that you know about microfinance, you've got a context for it already. What I love starting out with is that it is the story of hope, dignity, stewardship, sustainable development, and innovation. And it's one of the only types of development that actually is all of those things. That is Opportunity's story, but it is also many of our microfinance partnerships story. Someone asked a question about partnerships with Jeffrey Sachs. Opportunity does have a lot of partnerships, both as we raise money, but then definitely we implement it on the ground. That is a key thing to make sure that we're reaching the right target market as effectively and as efficiently as possible. So like I said, that's our story, but it could be true of a lot of different microfinance organizations too, which is great. One of them would be the Gates Foundation. Melinda Gates has said, microfinance is one of the critical cogs in poverty alleviation in the entire developing world. She has come over and seen our work in Malawi. The Gates Foundation have been a huge supporter of microfinance, both domestically in the States, but then internationally as well. So that's been fantastic. I'm going to give you a little bit of an idea where we're going. Microfinance and opportunity at 20,000-foot level. First of all, going back to kind of the little paragraph that you were promised in the conference outline, what has already been achieved, and then where do we go from here? How do we get there? And so for those of you that you may be new to microfinance, we're going to look at the toolkit, but really, really briefly, and then we'll spend time on innovative microfinance. So not just the tools, but also the programs, because there's a couple of things to look at there. And then for those of you that are currently studying business, whether or not we're going to have time, because we did start about 20 minutes late, I'll at least show you a couple of things, slides on the business case for microfinance, and you guys can follow up on it later, maybe even over your Christmas holidays when you get a little bit of breathing time. But like I said, I'll touch base on it, give you a book recommendation, and then we'll keep running through here. One of the things that I was going to say that, well, I guess the four main things that I was asked to cover today: strengths, weaknesses of microfinance, the past history of microfinance, future, and innovations. So really, because of our time, we're going to focus on future and innovations, but if we have time for questions, we can tackle any of those other things as well. Or over lunch, you're welcome to ask me additional questions. So just to kind of give you an idea of where we're going. This is, I would say, the key toolbox. And so you'll know that any microcredit, microfinance organizations, as they start out, especially the microcredit ones, their main focus is on tool number one, the loans. That is crucial. Opportunity has been going for 40 years, as long as Grameen has been going, and we all started with microloans. And so even if an organization is only doing microloans, that is still good because it's still needed. However, as you continue to build and grow with your clients, you'll realize that microloans are not enough. And so you really need a holistic toolkit if you're going to do holistic microfinance. So we'll take a look quickly at savings, microinsurance, and a little bit of training as we go through some of the innovative products. This gives you a quick, actually I'm just going to put it all up here, a really quick slide, about a 3-second slide on how the industry's grown up over these 40 years. We all started out as NGOs providing microcredit, and then some of us have started to scale up to FFIs. For those of you that haven't heard that term before, it's a full financial institution. And then regulated institutions providing microbanking. Now the great thing about that is that it doesn't take away anything from the client that an NGO provided, it actually adds to it. Not only are we able to scale out further and reach more customers, but we're able to give them more products. So you can see that as an FFI or a banking institution, we can then offer interest-bearing savings accounts. It's tricky to do well actually you can't do interest-bearing savings accounts just as an NGO. You can do group savings, but you can actually do interest-bearing savings account and start to build a credit rating for your clients if you're a little bit further down the path. Microinsurance can be done as a microbank, training can be done all the way along, and then your value-added products. So in a quick snapshot, that is where the industry has gone over the last 40 years. So it's a very, very exciting place. I put this slide in, realizing obviously that we'd be hearing from Jeffrey this morning. This is actually the Millennium Village over in South Ghana, just north of Kumasi. I was there in April, and it was a very, very exciting thing to see, and it was an honor to be part of what Jeffrey is doing. They're making phenomenal strides, as he was able to tell us today. So I'd encourage you, take a look at the PowerPoint and the brochure that he sends through, and spend some time on that, because the whole system is working well. There's still a lot of learnings to happen, and then a lot of learnings to kind of scale out and decide, how do we actually replicate this beyond just those 14 locations? That's going to be a real challenge, but definitely an exciting one and a doable one. The other thing, just while we camp on this slide for a minute, that I'd like to draw your attention to is, earlier, Ross passed out the Poverty page. So if you've got that in front of you, if you don't have it in front of you, we've got some extras that you can pick up afterwards. The neat thing here is, this is just said, it's called 10 Indicators of Our Progress in Ending Extreme Poverty in Our Generation. This is what Jeffrey's talked about. Microfinance actually addresses every one of those Millennium Development Goals. So it's very exciting to hear Jeffrey list those 8 goals and say, hey, microfinance opportunity, we're actually part of the solution to all 8 of those goals. When you think of where we've come historically, this gives you a great kind of 10-point overview. So just for sake of time, I'm just going to read the top one out loud and the bottom one out loud. But like I said, take it home with you. And what I would say, the challenge is for your generation to push this further. Jeffrey's giving you the 2015 date, but then he said it is going to be another 15 years to take it the next step. So that's you guys, and it's a really exciting challenge. So the first one says poverty rate. The total number of people living on less than $1.25 a day around the world fell by nearly 500 million over the last 6 years. 500 million is huge. That's way more than all of Canada. So that's a lot of people. Another 3 million people should escape poverty by 2015. Never have so many people been lifted from poverty over such a brief period of time. When Jeffrey talks about extreme poverty being eradicated in your generation, it is absolutely true. And that has never been true before, and it just literally gives me goosebumps. So I would say keep that in the top of your mind. The bottom one, microfinance. In the past 12 years, the number of very poor families with a microloan grew more than 16-fold to almost 130 million families. And then when you say that a lot of developing countries' families have on average 5 or 6 people, you multiply the impact by all of those people. So take that home if you want. And like I said, you can take a chance to read through all of those things. But historically, especially in the last decade or so, we really, really, really are making progress. So it is very exciting. If we take a look at, I'm just going to go into microloans for a second and only camp here for literally a brief time, because most of you do know about microloans. But as we start looking at the toolkits, there are some basic things and then there's some innovative tools. So the basic one is microloans. I would say that many organizations, including Opportunity, reach the bottom of our target audience through group loans. So we call them trust groups. I know Finca calls them, I think Finca calls them village banks. Like there's so many different names, but the concept is that these people co-guarantee each other's loans. And quite often, because they're living and starting at the $1 to $2 a day level, they don't have actual assets that they can use as collateral. So the whole idea behind us calling it trust groups is that they know each other, and it's based on character collateral. And so with this sort of system, it's phenomenally supportive. They co-guarantee each other's loans. And we actually, at Opportunity, have about a 95% repayment rate from the poorest of the poor through group loans. Like I said, there's a lot more information that we could go into, but it's an exciting way to be able to reach out in a very, very supportive and dignified way to reach our clients. Then, the next tool in the toolkit, as the organization and as Opportunity grew, is savings. And how that happened with us, we went and talked to our clients and we said, your business is growing. How can we as an organization serve you better? What can we do for you next? And they said, you know what, we need a safe place to save. And so we started then, this is our banking hall in Malawi, we started giving them interest-bearing savings accounts. And so for as little as 50 cents in some countries, $2 in other countries, they can actually open an interest-bearing savings account. And to give you an idea about the wealth of the poor, this gives you just some of Opportunity stats. So last year they opened almost 800,000 interest-bearing regulated savings accounts worth close to $90 million. So if you think that the people around the world who are poor because they're lazy, you need to so get that out of your mind. It is so not true. The poor people around the world, if they are still alive, shows you right away that they are not lazy, that they are creative, hardworking, and they are ready to do whatever it takes to provide for their families. Again, when you have time down the road, there's a book that was written maybe 10 or 15 years ago by Hernando de Soto called The Mystery of Capital. Why Capitalism Works in the West and Doesn't Work Anywhere Else. Fantastic read. And one of the things he does is he refers to the poor's assets as dead capital. And he says, you know what, they have capital, they can't use it. And I'm not going to take time to go into all of the reasoning behind that. It's a fascinating read. But he said if they were able to use their capital, it would be worth fields of diamonds. And so just even little Opportunities, pocket of the 90 million with our clients, gives you a little bit of a window of an insight to the potential of the poor. This next slide I love. This is Telly Fellini. She's one of our clients in Malawi. And what I'm going to show you, I'm going to pass around. This is similar to what she's holding up. It's one of our smart cards. This is just a sample, so this is not a real one, but we'll pass it around. What it is, it's equivalent to something like our debit cards. So if we are reaching people that are starting on $1 to $2 a day, a lot of our clients are illiterate. Now the great thing is they've been able to send their kids to school, but a lot of our clients are illiterate. They may not have been able to afford any other piece of identification. They may not have ever learned how to sign their name. So typically then, they would be excluded from banking services. A bank is not going to let you in the door and give you a loan if you don't have a fixed address, if you don't have a piece of ID, and if you can't even sign your name. It's 25 different places on that page. So what we have done is, we've given our clients these smart cards, and this little circle here is actually a biometric piece. So they can use their thumb or their forefinger on that, and not only does that mean that everyone is included, no matter if they're literate or illiterate, but it also is a phenomenally secure sense. So if someone decides to steal my smart card, they still can't access my lifetime savings because they don't have my thumb. So it's a phenomenally safe way to save, and it's become very, very dignified. Yep.
Sorry, so that would be like your PIN?
Yeah, that's your PIN. Yeah. And so you'll see a couple other pictures as we go into technology. But that's, like I said, it's a really fun tool that, again, we have access to debit cards. Now the poor are finally having access to the same thing. Okay, I am going to jump fast, and I'm going to apologize for that, but here we go. The third tool in the microfinance toolkit is insurance. And so this is a really neat story. We're going to start with a story, look at a graph, and then finish with the story here. Same story. But we're going to take a look at one of our clients in Accra, Ghana. And this was a story from last year, almost around the same time, actually. She was in Makola Market. She had a little market stall, and basically a fire went through the whole market just before Christmas. So wiped out everything that she had in her store, and also her fellow trust group people as well. And so, like she said, it was her 8th loan. It was worth $1,000. That's a lot of money in Ghana. She had her store full for Christmas sales, and like she said, she lost everything. So she knew that basically all of them in the trust group, they had no way to either pay that loan back, restock their stores, and then provide for their families. That is the reality of the developing world. So this graph I'm going to put up here, We'll walk our way through it, but the key thing that you need to know in the developing world is it's not if a disaster is going to happen, it's when. And that is the reality. We have insurance. We don't necessarily always like insurance companies, but let me tell you, we're pretty blessed to have access to insurance if we want it. So finally, the developing world is getting the same thing. And so what you've got here is you've got along basically the x-axis, you've got time, and then the y-axis, you've got the vulnerability line. So a typical entrepreneur is just kind of staying just hopefully above that execution line. And when that catastrophe happens, it literally is just going to finish them off. If she had no insurance, she would have lost her loan and owed $1,000, lost her store, and not been able to provide for her family. Chances are she would have moved away so that the loan officer would not have been able to find her. However, with insurance, she starts, first of all, with a microloan, she goes up the curve. That same catastrophic event is still going to affect our clients, even though they're microfinance clients. The tsunami doesn't stop at one person's door and not, hit one neighbor and not the other neighbor. Same with a fire, same with a drought. So our clients are still going to get hit. But if they have microinsurance, they are able to basically then put in a claim for that, get their money back, start over again, and bounce back, and life goes on. Our goal is to have a 6-day turnaround time to our clients, insurance-wise. Imagine if we had a 6-day turnaround time in Canada. That'd be pretty good. But we know that our clients don't have backup plans. If her store goes down in flames, we know that she doesn't have an inventory off-site. She needs help within a week to get it back up and running. So that's, like I said, that's the difference that microinsurance makes. And so if you want to learn more about microinsurance, we have a fully owned microinsurance agency. It's called Microinsure. So it's micro and then E-N-S-U-R-E. It's all run together. It's wholly owned by Opportunity at the moment. They started about 7 years ago, and they provide microinsurance through a lot of partnerships around the world. Fantastic website, lots of great videos. So take a look at that if you're interested. Going back to Esther's story, because she had insurance, she didn't have to pay back the remainder of her loan. She also was able to get a new loan. She was able to rebuild her business, buy stock, still make that Christmas season, and provide for her family. And I put her picture up here because this is a picture of Esther after. And she is still beaming. So you can see that the insurance did what the insurance needed to do. That's the power and also the dignity of microinsurance in the developing world. So that's the third tool in your toolkit. A lot of microfinance and microcredit organizations don't have that yet. So it's very much on the innovative side. I would say when you think of innovation, that is one of the most innovative tools right now. Just thinking, I'll give you kind of a quick overview of some of our key types of insurance. Of course, we've got business insurance, we have health insurance, life insurance, we have crop insurance in some countries in Africa. We'll talk about that a little bit later. We have funeral insurance, which is really crucial. And in Southeast Asia, we're actually working on something called catastrophe insurance. So, because, you just watch the news and you know what hits Southeast Asia all the time. So, like I said, we are trying to work with the market and develop products in different countries at different rates for the needs that are there. So now, if you think of, those are some of the innovative tools. Part of the innovation that Jeffrey talked about is technology. How in the world do you get it out to these people? So I've got 2 slides that gives you a little bit of an idea how Opportunity does that. First of all, we do use ATM kiosks. So just like in Canada and the States, we have ATMs here. If you are one of our smart card clients, you can go to ours or one of the other banks we're connected to, use your ATM card, and do the same thing that we can do here. So ATMs allow us to scale out without doing it with bricks and mortar everywhere. We have point of sale locations, and a lot of people haven't necessarily heard of that POS term, but think about the last time you went into basically any type of store, and you either paid with credit or debit, and they gave you that little contraption, and you either swiped your card or stuck your card in. That's a point of sale device. So the neat thing is that we're rolling that out in some locations in the developing world. So for instance, in rural Africa, instead of our farmers having to walk all the way into the nearest big city to go to a branch, a banking branch, they can go to their close and local fertilizer and seed supplier, use a POS device, and either withdraw or deposit money. So POS devices, simple things here, but they're not taken for granted over there. And then the mobile banking units is one of my favorite things, and I brought a little prop today. This is our little mobile bank, and the way I like to describe it is that it's kind of a combination between an ice cream truck and a Brinks truck. So for those of you that you're maybe not as old, well, clearly you're not as old as I am. So I don't know if you, how many of you had little ice cream trucks that, or anything, ice cream bicycles that will go around your neighborhood in the summer growing up? Okay. quite as ancient. Anyway, but you know, they always come around like they're brightly colored. They've got little bells going or some sort of music to, you know, alert the kids and drive all the parents crazy. So, but the thing is, it brings good news on a hot day. So if you think of a mobile truck that way, what this is doing is reaching out in a relatively cost-effective and efficient way to the rural areas. So clearly, before we put a bricks and mortar branch somewhere, we want to test, is there a market for it? And then even if there's a market for it, it may not justify a whole bricks and mortar branch, but we still want to give banking services to those people. So this little mobile van goes out sometimes with music, sometimes with loudspeakers, because again, if your clients are illiterate, you need to get their attention and you need to teach them somehow. So it goes out in all sorts of ways. The one in Malawi is red, Rwanda is blue, and it goes to basically the market center at the end of a busy market day. So if we're all in a market at a village and we've all got our own little stall, and if we got a really good day, that's great. But you know what? Without the mobile van coming, you would have to take the next day and take the money in your pocket and walk into, let's say, Lilongwe in this case. You would lose a whole day of work because you'd be walking the whole day, and it would be dangerous for you because on the way there, you're walking with money in your pocket. Because the van comes out to you at the end of the day, you don't lose a whole day walking, and you have a safe transaction. So that's the ice cream truck happy side of this. The Brinks truck side is that it's fully armored, fully secure, fully internet friendly, and on real time connected to our banks back in the main city. So you can see here, it's got basically an ATM window. That one's closed, but this one's open. I'll pass it around. It is a piggy bank. I've started to put stuff in it, so if you want to put a loonie and a toonie in it as it goes by, feel free. But on the one side, you can see it has it's got handprints. So that's where someone can just basically it's an ATM on the one side of it. People can go out, put their handprint or finger thumb, and do their banking. On the other side, we actually do have tellers. So if their banking is a little more challenging, or if they're a new client and they actually need the contact, then that's there. So I'll start in the background. We'll just kind of send it around. So that's our fun little mobile van. Telekalini's our poster child in Malawi, so she's on the back of that van and even the little mobile van. But that is one of the ways that we're using technology to reach out. Going on to the next slide, we talked a little bit about the biometric fingerprint scanning and the smart cards, so that's already circulated. The other thing that clearly, we can't omit anymore is talking about cell phone banking. So Jeffrey brought it up this morning, which is great. I put this picture in this morning. This picture just absolutely cracked me up. This is one of the farmers that I met just outside of the Millennium Village last April in Ghana. And he's a cocoa farmer, so he's holding basically cocoa, I don't know if I'm a business person, not an agriculturalist, so I don't know if you call that a cocoa pod or, anyway, or little cocoa beans inside of this. Anyway, we had a fantastic tour of his cocoa farm. And at the end of the time, he's talking to the group from Opportunity. We have foundation funding from the MasterCard Foundation, so some of our MasterCard folks were there with us seeing this and meeting. His name is Seth. We were meeting Seth, the farmer. And someone's cell phone goes off. Now we're in the middle of this cocoa farm in Ghana. None of our BlackBerries have been working for at least 24 to 48 hours. And here someone's cell phone goes off. And it's not any one of our partners. It's Seth's cell phone. So I just told him, I just got the biggest kick out of this because he's got a machete in one hand and his cell phone in the other hand. And so I'm laughing at him. He's clearly laughing at me taking his picture, but I just thought, how cool is that? And so that is the thing. We are doing cell phone banking now, and PES is probably one of the most well-known. A lot of organizations are doing it now, and it is a great partnership. It's a win-win-win, win for microfinance, win for the telephone companies you're working with, and obviously a win for the clients. We also are starting to sell our micro-insurance through cell phone banking. So like I said, it's a great way to expand over and through the jungle, and again, an efficient and effective way. It's just phenomenally exciting. Okay, that gives you a really quick run through kind of some of the innovative tools and then how we're doing it. I think the next one is we'll take a look at some of the innovative programs then, specifically. Okay, micro schools, and I thought this was really neat. When Jeffrey was talking about one of the Millennium Goals, it was not only about equality, but also primary education. And so in 2007, we had some very, very entrepreneurial clients that said, listen, we could start a typical little business, but we'd actually like to start a little private school in our village because our kids don't have access to any of this. So instead of calling them entrepreneurs, we affectionately call them edupreneurs, and they have started micro schools. So this is, again, it's a tool and a program because we have loans that are specifically for these edupreneurs. And I would say they're more SME loans versus microloans. And then we have different types of training for them. So it's quite an exciting way to progress here. The amazing thing is that not only are you providing jobs for local teachers, but you're investing in the next generation. So those kids now are able to go to school. They're able to read and write. You break the cycle of illiteracy, and you break the cycle of poverty then in one generation. It's one of the only things that does that. So it's been very exciting. I'll give you just a really quick synopsis here. This is Mama Rosemary in Uganda. And she started out literally just taking care of 20 kids when they were little, 20 orphans kind of in makeshift. I'm going to go through her story really fast, and I apologize, I'm not going to really do justice to it, but I'm also watching the clock. What I want you to see is how effective microfinance is, and then also in an innovative tool like education here. So I do put here for Mama Rosemary, dreams do come true, not only for her, but the students that she's supporting. So she went from makeshift quarters to now she has 5 permanent buildings. She went from basically taking care of 20 kids and then adding on the services and the grades as those kids grew. She now has an elementary school and an orphanage for 900 kids. So when you look at those Millennium Development Goals about getting more kids into primary school, this is one of the best ways to do it because, again, it's done all locally. And so it's culturally sensitive, it's in the right neighborhoods, things like that. She now, instead of just employing herself, she employs 53 people. So again, think of what that does to the economy and the dignity in her community. It's amazing. This all started with a $204 loan. Now her last loan was $7,000, but it started with $200. So that again is the power of it. This one I'm going to go through quickly, but the key thing here, and Jeffrey touched on it actually, was interesting. He talked about equality, and someone asked a really good question about that. The UN basically has shown that 75% of the illiterate adults in the world today are women. So the idea between micro schools being a safe place to send your kids, especially your girls, right in your own neighborhood, means that that whole statistic will change over time. So like I said, a really effective thing. We've got roughly about 40% young ladies in here versus guys. All of us young ladies would not be sitting in a classroom today if we lived where they live. So if you had a micro school in your village, you would be, but otherwise you wouldn't be. So like I said, that makes a really big difference to your future. So that's a quick introduction to micro schools. I'm going to jump to one of our next innovative programs, and it's called Banking on Africa. I call it Egg Finance. And so it's interesting. I mean, if you think of microfinance in Africa, most of the microfinance organizations, including Opportunity, started out in the urban areas. That's where, as Jeffrey said, that's where the infrastructure is, and that's also where the densely populated, so many of the slums and the really densely populated neighborhoods that need microfinance are. So we started out there, but if you really want to impact and reach Africa, you need to go rural. And so a couple of years ago, Opportunity made that intentional decision. It's expensive, it's tough, it's time-consuming, it kills our ratios, but if you actually want to make a difference in humanity, it is where you need to go and it is worth it. So that's what we've started to do. I am going to not go into a whole lot of detail as far as, I was going to tell you his whole story, but this is Henry, by the way, in Malawi. What I am just going to do is read you a quick quote from Henry, and I'm hoping that you'll just kind of grasp the importance of what bringing Egg Finance to his village has done. Henry says, and he's microfinance, so it's not only loans, but crop insurance, which is what he refers to here. So he says, before crop insurance, we would be sleeping on an empty stomach this time of year. Now we're able to buy good food, a lot of beef and chicken where before there was no meat. And we eat 3 meals a day instead of just 1. Henry has 8 healthy kids. He said today, one of his friends actually added, named Gerald, he said today there is no hunger season. So I don't know how many of you guys had breakfast today. Probably most of you skipped it, slept in for another 15 minutes and came here, and there probably are quite a few growling stomachs, but you know that that is going to be fixed in about half an hour. That's totally different than when he's talking about a hunger season. So again, it's a matter of perspective. And I was going to say, Jeffrey talked about the importance of balancing out the egg system, agricultural system, and so that is something that we're doing at Opportunity. I'll go really quickly through here. These are some of the components of Egg Finance. We increase farm productivity. Now here's kind of an interesting thing. A lot of times, you know, if you fly over southwestern Ontario, if you're taking off from any of the airports close to the universities that you're from, you'll see farms that are in pretty nice geometric shapes. You've got a fence or a row of trees or whatever, but you know whose farm is whose. In Africa, not so much. So it's an interesting thing. Quite often they follow the creek or they follow somebody's little tree line, and you don't necessarily know where yours starts and where yours stops. So if you're trying to figure out how your efficiency is based on a farm, you need to figure out, first of all, where are your boundaries? So what we've started to do with this program is use a GPS mapping system and actually follow our farmers around on foot, first of all, and map out their little farm. So what that does is, first of all, it tells them how many acres do they actually own, and is it theirs, or are they actually overlapping with their neighbors? So what that does is a couple of things. If they think, for instance, that they have 5 acres and they only have 3, then they're going to wonder why their productivity is so low for 5 acres, where it might actually be great productivity for 3. The flip side is also true. And so, like I said, we're just helping them find out how big is their space. One of the cute stories about this was a lady that came in to buy fertilizer, and we said to her, how much land do you have? And she said, well, I have an acre. And I said, well, how do you know that? And she said, well, I bought a bag of fertilizer that said it was enough for 1 acre, and I went out, and I, by hand, I distributed my fertilizer, and I used it all up. So clearly, I have an acre. That may or may not be true. So either if she had 2 acres, then she didn't have enough fertilizer, and again, she's going to wonder why that fertilizer wasn't as good as it said it was, because the stuff is not going to grow as well. Or she's going to have totally killed her crop if she only had half an acre and she over-fertilized. So it's a basic thing, but we're helping them increase farm productivity. And again, some of these things you can summarize together. Income smoothing. When you think of the seasonality of budgeting, even in North American farmings, there is quite a seasonality to it. If our farmers run out of money mid-growing season, they go to the loan sharks. Or they basically pre-sell their crops and then they don't get enough for their crops when it's ready. So what we have started to do, when you think of innovative products, we've listened to our farmers and we're actually building an extra bit of loan into that whole crop growing cycle. So that when they reach that really dry period when their crop is growing, but they don't have the money yet from the harvest, they get another little infusion from cash from a proper bank so that it's safe for them, it's at proper interest rates, and they don't have to basically pre-sell their crop so that when their crop is ready, they get 100% of the price for their crop. So like I said, you need to listen to your clients, work with them, teach them about seasonality, providing the household safety net, teach diversification if possible. If we can teach them how to grow different types of crops, again, that's gonna protect them as well. So a number of things there. This was also a picture from Malawi from this spring. They were opening a new rural branch, and the amazing thing was it was a village outside of Lilongwe. Probably about 300 or 400 people. We had about 300 people show up that day, and it was a celebration for the whole village. But what struck me about this is that the speeches galore, but when the chief spoke, he was probably in his 80s, and we had about 75 kids sitting there perfectly quiet, and he spoke to the kids and he said, you know what, I have waited my whole life for a bank to come to my village. And he looked at the kids and he said, now you will be able to grow up with one. And I just thought, wow, we take that for granted, guys. These people are getting it for the very, very first time. So again, innovative tools, innovative programs. Your conference talked about effective long-term specific solutions. Is microfinance that? Absolutely. Creates jobs, stimulates small businesses, strengthens communities among the poor. Absolutely. I'm going to just really quickly, not take time to go through this slide just because of time, but what I want to draw your attention to is the book title right here. If you haven't read A Billion Bootstraps, and if you're in business and if you're interested in microfinance, that is a great book. It's full of great stories. But chapter 5 talks about these 4 levers, and it talks about the business case for microfinance. So even if you buy the book and go right to chapter 5, you can get it. It's a fantastic read. And like I said, if you're interested in economics, politics, business, that would be the chapter for you to read. One of the main things it says here is that it talks about leverage. And so you should be, if you read chapter 5, we'll learn about those 4 levers. You need to be, if you want to get involved in a microfinance organization, looking for one that uses all 4 of those levers. Opportunity is one of those that does. And so basically, every $100 that's actually donated to Opportunity, we actually are able to leverage it up to $137 going out to our international clients. Lots of different ways to do that. The little mobile bank that's going around, if any of you have put your loonies and toonies on that, one of the ways to leverage is that we actually have a matching fund donor right now that is going to be funding anything that's undesignated money. So a match is one of the simplest ways to leverage your money. But like I said, look for those leaders and look for organizations that do that. This is a great quote. Some of you may know Ian Tuffer or of him. He's chairman of the World Cup. He went over and saw our work in Uganda and Rwanda a couple of years ago. And he said compassionate capitalism can achieve the charity and good intentions. Sometimes cannot. So I think one of the things that I'd like you to leave with today is when you think about microfinance, remember that it is really the only type of development, I would say, that creates value, is sustainable, and that's a crucial thing in your conference today. It leverages and it grows your investment, and it runs on a business model. It's one of the only organizations that does that. For those of you like Ross that have seen my presentation before, he'll have seen these two slides. These are my favorite, basically, last two slides. And this is Gertrude from Malawi. And she is, what I like about her, she's one of our clients. She has 7 employees. She has a poultry and fresh fruit and vegetable stand in the market. And what I like about this slide is that the storm clouds literally in Malawi are raging around her. Usually it's a beautiful blue sky. On this day that the photo was taken, clearly it's not. But she's holding some of the eggs here. And if you blow that up, what you can see is that's what she has written on her eggs. So when Jeffrey challenged you to be part of something, think about microfinance. We have won the geographic jackpot. Whether that means you were born here or it means you have come to school in southwestern Ontario. We've won the geographic jackpot. And like Jeffrey said, we are responsible for that. So I would say do something. It doesn't have to be microfinance. I'm biased, so I'd love it if it was. But do something, be responsible, and definitely be a part of bringing hope to the next generation around the world, and being a part of the developing and achieving those development goals. I would say that as we end, development, Jeffrey would say this too, in microfinance, I would say, is it easy? Nope. You know, I'm not naive as to think it is. It's not cheap, it's not easy, it's not fast, it's not risk-free, it's not simple. But what I would say to you is, it is innovative, it is sustainable, it does create dignity, it does build hope. And I would say really, quite honestly, it is the best thing out there. So when you're looking at ways to engage, whether it is as a student group or down the road with your corporations, think about microfinance. A couple of things I'm going to leave for you here. If you're interested in opportunity, we have a group called YOW, it's Young Ambassadors for Opportunity, and you can pick up one of those sheets. Alternatively, Andrew is our fellow in Toronto that runs YOW, so you're welcome to email him. And I've asked Ross if he'd be willing to put his email up here. There's a Western Microcredit Society Club here right on campus. So feel free to key into either of these. For those of you from Mac and Ryerson and Waterloo, Andrew might be able to connect you with other people on those campuses that are interested in those cities. So feel free to do that. And I guess, oh, we've got 1 minute per question. So
We can go there.
yeah? Okay. So we'll take maybe 3 or 4 questions and then we'll officially stop. Yes?
Yeah, I'm just interested to know, like you know how you said you guys are implementing point of sales like devices.
Yeah.
Do those also operate on credit?
Some of them do. Yeah. Yep. Anywhere that we can do that, we prefer to do that. Yeah. Yes.
I know with a lot of microfinance institutions, not necessarily in every country throughout Sub-Saharan Africa, but in some, it brings tensions within generally because a lot of microfinance institutions focus on women. And then their male counterparts sort of get angry that sort of friction offsets what microfinance is supposed to achieve. What are the ways to overcome those situations?
Yeah, okay, good question. One of the key ways is to make sure that we do it in a culturally sensitive way. So we have, at this point, almost 12,500 staff people around the world, and 99% of them are nationals. So we do microfinance in 24 countries, 24 developing countries around the world, and we want to make sure that we do it in a culturally sensitive way in each country. So that, first of all, is right off the bat. The other thing is, or I would say the second thing is, how you expressed it would typically be our reaction here. And we find it to be actually totally the opposite in the developing world. We find that as women are actually able to start to build a business and bring some finances into their families, first of all, not only do families benefit, because I don't want to offend any of the guys here, but I got to say, internationally, the UN actually backs it up. Statistically, the money that the females bring in go to the kids. Go to your families. I'm not going to say where the money that the men bring in goes. So it benefits the whole family. And then interestingly enough, the husbands actually say, wow, this person is bringing value into this family, and there actually starts to build respect. And we had, one of my colleagues from Chicago went to visit a trust group, a large trust group, and I think it was in Kenya. And at the end of it, we asked our clients, like, how has this actually changed your life? And one of the fellows got up, and it was interesting because the majority of our clients are women. And so this was a fellow in a trust group, and he got up right away. And we typically would not say this in North America publicly, but what he said is, he said, when opportunity introduced me to savings account, I stopped beating my wife. Yeah, I like your reaction. That's exactly what we said. And so, now who would say that in public, right? Anyway, but the key thing is, I mean, you know the old adage, as far as like if there's financial stress at home, it's kind of like, you know, husband beats the wife, wife beats the kid, kids beat the dog type of thing. Now, I mean, hopefully that's, you know, not true, but that's kind of the saying that goes. So the thing is that when financial stress comes off the family, it takes a whole lot of other tensions away. So this guy was actually saying, you've helped us learn to budget, build a savings account. You've taken phenomenal financial stress off our family, and so therefore it's taken emotional stress off him. And he stopped doing something that he really shouldn't be doing. So interestingly enough, good question, but we've actually seen totally the opposite effect on it. Yeah. Yes?
I'm really curious about how you sort of developed like these infrastructures, like starting the seeds, and just like how it got going with that, I don't know, to the scale it is now.
Yeah. We did, as an organization, we started out as an NGO, and so now, as we're going into new countries, we do actually go as a financial institution. So we go through, we build the equity that we need to build when we apply for an actual banking license in that country. But as far as infrastructure goes, that's why we start in the urban areas, and then to work our way out, we work our way out by not only the mobile banks, but then also cell phone banking for sure, the little point of sales. Like we're doing a lot of partnerships. So for instance, we may have a partnership with a local seed company that has then stores throughout, you know, much of rural Ghana. So then we're able to give banking, access to banking, but we're not there actually, but we're able to do it through the seed company. So we're doing it that way. The other thing is we're looking for low-cost ways to expand. So you guys know the shipping containers, the international shipping containers. Those are used for a lot of things nowadays. One of the things that we use them for are small bank branches. So we're able to get a shipping container, put a safe and secure roof on it and a large overhang so that it gives our clients shelter from either the sun or the rain out as they're lining up for it. But then again, it gives you a number, like a whole storefront there as far as teller kiosks. Doesn't need to be a lot of space to do the banking behind it, because then again, it's all, electronically friendly up to the main branch. But again, that lets us put a shipping container branch in a little village. We can get that up and running in about 6 weeks, and just for a fraction of the cost. So that's one of the ways. Yes?
Just in terms of, I guess, traditional banking versus something like the solution, with the rates of returns, I guess, required by investors and that sort of thing, how do you get interest, one, from the investors, and I guess partnerships? You mentioned partnerships. So how do you get those partnerships going? Just because, I mean, living in like Canada and stuff, and just even taking classes, the big thing is like rates of return. How can you provide rates of return for your shareholders?
Yeah, it depends on what type of funding you do. So we do have some shareholders in, especially our African banks. And so it has to run on they are for-profit institutions because we obviously have certain regulations we need to achieve each year in those countries. But we run it on, I would say, kind of a not-for-profit model. So one of my colleagues has said, think of us as HBSC with a heart. So it's a matter of, we do need to make sure we're making the returns, but any profits that come are put actually back in the business. So what that does is it helps fund more innovation, more products for our clients, or it helps us decrease our fees. So we do have shareholders, but they're not getting a profit from it. So it just depends. As someone over here that may, like, if that aligns with your values, then that's where you're going to want to invest. If you want to do social investing and actually get 1 or 2% back, then you may need to look elsewhere. We have one organization in Toronto that gives a $100,000 loan at a small percentage, and what they have said is they just donate back the interest to us. So it is a loan, but again, they're donating back the interest. So there's lots of ways to make that happen. And then as far as partnerships, we just need to ask. Yeah. But I would say it's our funding comes from the private sector, foundations, corporations. It does come from CETA as well, so lots of different sectors. But like Jeffrey said, development always needs more funding. Like even when you look at all of the microfinance institutions working together, we're only still meeting 10% of the need. So the funding needs to increase so we can grow faster. Yes.
Have you ever faced an area that has, higher than normal default rates, and sometimes maybe the group model doesn't work in those areas? Are there any other ways to encourage them to pay back those rates or programs?
Yep. I would say quite often, if an area is having a tough time paying, it's usually not because of the group model. It's usually because of actually the economy or some sort of, again, geographic catastrophe. So right now, the last 2 winters, Colombia has had phenomenal flooding. And so what I have been absolutely amazed with is how creative and hardworking our clients have been to actually still try to run their businesses and pay it back. In not all cases have they been able to pay it back. And so there's actually been a small group of Canadians that have gone down to Colombia and have a heart for that part of the world and said, listen, we're going to raise a special fund and call it a mercy fund. Because we don't want to say, okay, it's a forgivable loan, because if word gets out that it's a forgivable loan, nobody's going to start repaying back, so that's a bad business model. But there are, we're all humans, catastrophes happen. We don't have as many insurance products yet in Colombia. So we say, okay, just like Jeffrey was talking about mosquito nets, we've been blessed. How do we actually share that blessing with others? So we created a small, what we call mercy fund, that is able to help with that on a certain basis. That being said, one of the ways that opportunity works is through our loan officers. And we do what I call high-touch microfinance. So our loan officers meet with our clients on a weekly or bi-weekly basis. So if someone is either starting or has defaulted, our loan officer personally knows them and finds out why it is. So it's a legitimate need.
Sorry, just to follow up really quickly. I know in Vermilion what they do is, like, the incentive to pay back your loan is you can take out a bigger loan.
Yeah,
right?
We have that too.
Yeah, so I bet it's the same. Is there any other incentives? Like positive incentives?
Yeah, I would say, to be honest, well, a couple of things. I would say the group peer pressure is a pretty positive, it's peer pressure in the best sort of way. And our clients, they love the fact that they actually not only have banking services, but basically that we have said, we trust you enough to give you a loan. We're actually treating you as a business partner. So they want to pay back the loan because to them it's a matter of dignity. So that's actually, that in itself is usually enough incentive. But then also clearly, if they pay it back, they can give them a bigger loan too. Yeah. And probably last question then, yep.
Okay, about micro insurance, is the proportion to their income really high or low? Like, is it taxing for them? And how do you limit the paperwork so it's not too much, but also be able to prevent abuse of the system?
Okay. Yeah, good question. And we're learning as we go, because like I said, it's only been basically the microinsurance industry out there for 7 years. So, okay, a couple of your questions. Let me see. Insurance, we think of it up here. Everything in this hour that we talked about, you scale it way down to the micro level. So when I say microinsurance, they can have access to our products for as little as $1.50 or $2 a month. So that gives you, first of all, that's how it's scaled down to their income level. And then as far as trying to make it as efficient as possible, one of the ways that we do that actually is through cell phone banking. So that makes it very, very efficient. One of the other ways that we do it, especially in the remote areas where we crop insurance, is that we actually use the country's weather meters and weather indexes. Because clearly, if it took, like if someone is way out in a rural area and a drought is coming, we're on the last question, so I just thought you want to know if you're panicking here. And so in a rural area, it would take potentially a day or a week for a farmer to come into the city to tell us he's having an issue, and then who knows how long for the agent to go back with him to assess it, and et cetera, et cetera. So what we do is, where there are country weather index stations, we actually use that information. So ahead of time, we can say, has this area that grows this certain type of crop, has it had enough rainfall or too much rainfall? And depending on where it goes on that, we will actually just send out their insurance money based on that alone, because we know that they're going to need it. We know they're going to file a claim, and so we do it based on that weather index system. So those are some of the ways, again, that we're using innovative technology to speed up the process. Yeah. So I guess we better probably, I'll stick around if people have more questions, but great questions, and thanks for hanging in there. And lunchtime, I guess, eh?